All right, ladies and gentlemen, welcome back to another market recap. Today we have a lot to cover. Today was October 4th, 2024. It was NFP Friday, so it was a higher probability day. Now, there were days earlier in this week that I honestly liked a little better. Today was okay. I saw 3 possible trades you could have took, maybe 4. So I'm going to be going over all those, but we had trade from Dodgy here. We have a trade from me that I took live, and then another trade that I tape read live. So 2 for 2 today for reading trades out. Go check out my live stream if you want to go watch that. But we're going to talk about from the beginning of the day how you could have determined the bias and the higher time frame. How you could have used the higher time frame to figure out where we were going to go. So let's jump right into it. Starting out the day, if I zoom out to the hourly chart, you can see that we had pushed into this weekly fair value gap. This happened on Tuesday and Wednesday. So ignore all this mess here, but you just focus on this weekly fair value gap. There was this weekly fair value gap, and then if I zoom down to the hourly chart, you can see that this was a market maker buy model where we had SMT at the lows. So the NASDAQ formed, the NASDAQ formed a low and then a higher low, and then the S&P formed a low and then a lower low. And this happened at the bottom of this weekly fair value gap. So you can see here we have a tweet from Justin where he says, midweek reversal profile drawn out, week of October 1st, 2024. So he marks out the same thing, showing how we have SMT at the bottom of this weekly gap, signifying that we are probably going to have a midweek reversal. And then clearly on Friday, we had this move higher. So that's how you could have known that Friday's NFP was going to expand to the upside. Now, we also had another NFP here. Another SMT here. And then we had this 1 hour fair value gap that price pushed back into right here. You can see that right here. We had this 1 hour fair value gap. Price pushes back into it. And then for NFP, we launch higher. So now let's go look at the lower time frame. So right after we had this push higher, right before we had this push higher, we had equal lows form right here. And these equal lows were relatively far apart. Unfortunately, I did not see these relatively equal lows right away. Otherwise, I would have been instantly super cautious and aware that we were probably going to go take those out at some point. But I didn't see those until way later when I took this trade. But you can see that if you took this trade and you took it all the way down to the equal lows, you would have gotten a 6.03 risk to reward. Now, I would have taken most off here, but if you wanted to leave runners, you could have definitely left runners, but you probably would have got stopped out of break even. So in reality, I would have taken off all here. So let me show you how you could have taken this trade. So this was not an inverse fair value gap trade. This was this is simply a TJR type trade where you have a sweep, you have a 1 minute market structure shift where we get a candle body that closes below this old low here, or maybe you mark it out right there. But either way, there's a market structure shift here at some point, and then on the 2 minute you have a fair value gap. So price pushes back up into this fair value gap, which is overlapping with this breaker block right here. So high, low, higher high, lower low. So this is a breaker block as well. So it's a fair value gap overlapped with a breaker. And I think we might actually even tap the midpoint of this breaker block somewhat. Anyway, this would be your entry, and your stop loss would go above the high just to be safe. Now, if you wanted to, you maybe could have just put it above the breaker. So maybe you could have put it right here. But with these types of trades, the TGR type trades, I like to put my stop loss above the high. Now, I'm not taking these live yet. I'm going to wait another 2 weeks to a month before I start taking these TJR type trades live. But eventually, I'm going to build up the confidence to add these to my repertoire. So probably in 2 weeks to a month, I'll start taking trades like that, as well as the breaker block trades. And I'll start taking them live. But right now, I'm just tapering them, only taking inverse for value gaps. And how did I know to target that low specifically? Well, you need an obvious draw on liquidity, and there was none. You can see this is a giant for value gap. So what did I think to do? I just said, what if we just target the low of this 15-minute candle, because there was no clear draw on liquidity, right? So I was like, let's just target the low of that 15-minute candle, and that actually was an amazing target for this trade. You can see right when we hit that low of that 15-minute candle, we got that was essentially the take profit for the trade, and then we got a reaction back to the upside. So that was a great place to take profit. So when you don't know where to take profit, just look for some recent candle, like a higher time frame candle, high or low, and that will often be a dictator. That can often dictate where a good place to take profit could be. So really great trade here, 1.5 to 1. I tape read it live. I did not trade it live. And then over here, we had the trade that I actually did take live. This was a 1-to-1 risk reward trade down to these equal lows. Now, this wasn't an A plus setup. It was maybe like an A minus or an A setup because we were so far in discount already, but I still liked this trade because we had an SMT, we had a sweep, we were delivering from a fair value gap here, and we had equal lows, which are such a strong draw on liquidity. So 3 to 4 confluences here. Seemed like a very, very strong trade. So, and plus you were able to move your stop loss to break even relatively soon at this low here. So I was pretty fine with this trade, and it was, yeah, not bad. Like 1-to-1 risk reward trade. So now we're gonna look at the trade Dodgy took. He basically took, let me pull it up here. So here's the trade from Dodgy. He took this inverse back to the upside after we took the equal lows. So he took the trade to the reverse. Now he was looking for longs, obviously, because we are so far in discount at this point that he doesn't want to short, and that's why he did not take this short, because we were already so far in discount. So that's something to keep in mind for the future, but I still like this trade. I don't think it was bad, and clearly it worked out. So anyway, we're very far in discount. We sweep the equal lows. We get this 1 minute inverse to the upside, inversing both of these fair value gaps at the same time. The candle body closes above. You enter right here. Stop loss, probably maybe just below this fair value gap, and then target would be either this high or this high, whichever you want. And yeah, nice little 1-to-1 trade from Dodgy. So that's mostly it. Like I said, no, like, for being NFP, for being such a high probability day, it was pretty, I don't know, average price action. It wasn't bad price action, but I feel like maybe some of the days earlier this week were like my favorite price action. So this was okay. And let's see. There was this. So I'm doing this recap a lot later in the afternoon, so I'm able to possibly review some afternoon trades here. There was this. Stop loss to break even at this high here. And then nice little 1.5 to 1. And then there was a trade here that Justin took. Let me find it. So he showing how there was an SMT here and a higher time frame gap, and then we were, I'm guessing I don't totally understand Justin's entries, but he clearly entered within this fair value gap after we got this SMT. And it was a break-even trade that he probably moved stop loss to break even here or here, and then he got stopped out. So there was a clear draw on liquidity. There were these equal lows, so definitely not a bad trade, but it did not end up working out for him. So we'll probably come. I'm guessing this could have been like a sweep, break a structure, for value gap kind of entry. That's maybe what this was, but I'm not entirely sure. So anyway, these equal lows will probably get taken out at some point later, but it's also unclear because it does look like we are in some kind of buy model. So maybe this buy model only takes us up to here. Maybe we don't get up to there. At least it's like it's part of a buy model, but we'll see how far up this takes us. So I think that about covers it. So I will yeah, that about covers it. I will see you guys in the next one. Bye.